Greetings, Dr. Jeffrey Scott, and this is my weekend market update for the weekend of June 18th, 2023. Remember, we do not trade on Monday, 3-day weekend. I title this, The Markets Continue Melt Up on Fed Pause. My email address is hgsidoc@gmail.com. If you're new to the channel, please hit subscribe, hit the alarm so you know when I do these. And I respond to comments, positive and negative, as long as they're constructive. And I always want to make these better. Been doing these for a long time. As always, it's for educational purposes only. Anything I recommend is in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent. The tools demonstrated I use in my daily trading. I paid for all the tools I demonstrate. And trading involves risk, and you're solely responsible for any investment decisions you make. Wealth 365 event is coming up. It's probably a lot less than 29 days. I think it's 22 days now. Not sure if or when I'll be speaking, but I'll be listening if I'm not speaking. I've got a pretty busy work week that week, so not sure if I'm going to be able to fit it in. But I'd really appreciate if you register using my link. I'll stick it in the remarks section. Why would I want you to register with my link? Because I like being part of the Wealth Charts family and Wealth 365 family. And um, I don't have a mailing list, so anything that people can do to register is great. I don't get paid, but it shows them that I bring some people to the meeting. If you like this, I do have a weekly video, a weekday video at stocksanddocs.com. Welcome to have you come check that out. So I always like to start with what did the markets do this week? So most important column is probably to start with the 5-day change. And when you look at the 5-day change and you look at the major indices, you could see it was a really strong week. The S&P up 2.2, the NASDAQ 3.2, cap-weighted Qs up 3.8, the Dow up 1.1. And then if you broaden out, look at the NYSE up 1.9, and the Russell, the laggard on the week, up 0.5. You'll also notice that next to all those greens are some reds on Friday. Now, it was either triple or quadruple witching hour, meaning options expiration. Um, and you expect volatility and some volume to come in with that. And you also may have seen some folks raising cash before the 3-day weekend. So it was pretty orderly, as you could see. The FANG 3 at 1.3, this is a leveraged ETF. Now, the interesting thing was Bitcoin was up pretty significantly on Friday, enough to turn the week positive, probably because it looks like there's some cooling between the U.S. government and Binance and making it easier for them to stay in business for a while longer. And then awakening from the dead is natural gas. Now, what I think is really impressive is if you look at the returns since the bottom on October 13th, and we are on the verge of having to say this is more than a bear market rally. Look at the NASDAQ up 35.6, the Q's up 44, the Spider up 26. But I think when you see the diamonds and the NYSE on the verge of entering bull market territory, I think that folks like JC Perrett and others who have been saying we've been in a bull market for a year start having to wonder about it. I'll at least give them to October 13th when we hit the lows. You could see that the only sector to be down on the week is energy. There's still not a lot of energy stocks that look interesting when I do my weekend review. If we look at the Q-Edge tool to see how the market did on Friday, you can see up here that 73% of sectors were negative, 68% of industries were negative, and 61% of stocks. So it was a weak day, not a horrible day. Utilities were up, healthcare were up, two of the more defensive type plays. We'll talk about buckets on a different slide, but really what's more important is if you look at 1 month, 10 days, and 5 days, you could see that we are in the midst of a pretty strong rally, and over a month, the majority of the sectors, industry groups, and stocks are up over that period of time. Now, rates were mixed. The 10-year, the shorter of the two, was higher. The 30-year was lower, as the Fed suggests 2 more rate hikes. You know, On Wednesday, after this came out, there was some weakness in the market, probably no surprise, and the market recovered a lot before it ended. The session ended. And then Thursday could have been a miserable day in the market, and it wasn't. And it's almost as if the market participants came to the conclusion that they were going to act not as if on how the Fed spoke, but how the Fed acted, and they acted pretty um, permissive by holding and waiting to see what the impact of the economy is over the next month. So rates were mixed. Breadth did improve. Stocks above the 40, above the 200-day, above the 40-day, the T2121, the short-term 13-week new high, new low, all improved, and none of them are to the point where you expect an imminent reversal, although the 2121 is getting up there. Now, I continue to be in we probably have a recession camp, and it goes to the old adage about it's never really different this time. And whenever you think it's different, it's not. And when I mean different this time, if you look at the 10.2 or the 10.3, when they cross below zero, they're followed by a gray band almost every time. And that gray band is a recession. This is going back to the 80s. If you look at the Philadelphia Diffusion Index, um, we crossed below zero point 0.2, and that's never been going back to the 70s when you haven't followed that cross or during that cross had a recession. Now it crossed back down to zero point 0.1, and so perhaps that's a sign that we're out of danger, but it looks like it's turned down again. So that's three of the four of these things suggest that we have a recession. We don't see, although I hear about it, but credit tightness. If you can see what happened in 2020, what happened in 2008, um, dot-com crisis here, we're not seeing that increase here. So 3 out of 4 things that I watch tell me we probably do have a recession, but just because I think we have a recession doesn't mean it's not going to be different this time. Current buckets, 80% of the stocks are above the midline. That's bullish. But there's not a lot of stocks trading at the top or above the Bollinger Bands. So again, not showing me that we have to reverse here. No Hindenburgs for a while. We wouldn't expect some, although we did get a couple in early May on the NYSE. And notice that the new lows, even on the NASDAQ, seem to be drying up. That is a bullish sign. Another week of junk off the bottom. You could see if you look at ERG, which is EPS rank, relative strength rank, and group rank, and you look at percentage gain, pretty much above zero across the board. But the biggest gains were done in stocks with low ERG, but there was another peak here of the high ERG. In the middle was relatively flat. So when you look down here, EPS rank, the lower the EPS rank, the better the performance. The lower the relative strength, the better the performance. But stocks that were in positive groups actually outperformed. So junk off the bottom with some of the leading groups still doing okay. Now, it was a good week again on the small holdings that I have left. And like I said, I've got some of the, I said at the live meeting, I have very few stocks right now. I've got 11. That seems like a lot, but that's across 3 or 4 different accounts when there'd be times when there could be 30. Um, so up, Fagmanta, which takes the FANG, adds Microsoft, Apple, NVIDIA, Tesla, and now I got to go back and remember what the other A was, Adobe. You start to broaden out the bigger cap stocks, and they were up 5.44. All 8 of them were up, which is pretty impressive. S&P 500 was up 2.2. The FANG stocks, Canaries up 2.35, basically the original FANG. And then interesting, MarketSmith 250, the 85.85, the weekend review, and the IBD 50, all were up, but interesting, like last week, growth seems to be doing a little bit worse than the S&P 500. News, I think the big news might be the House panel and the Senate panel that Powell speaks with. I think congressmen who will be coming up for election in another year might be pushing them on how much the economy is being hurt by the continued tightening of the Fed. So it'll be very interesting to see if how Powell responds. We've got Williams talking. I think there's a couple others that I've seen in other places. You've got some jobless claims and some PMIs. But I think it's the news is going to be Powell's mouth. If you look at earnings, another slow week. But if you have FedEx or you have KB Home, it's not a small week for you. Judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So I just wanted to show you something that I've been working on in TradeStation. And what I want to show you is this. And Ian taught us a lot of indicators. Now, he was a big proponent of things like the Hindenburg Omen. And if you go back, for example, at the end of 21 going into 2022, you're going to notice that the Hindenburg Omen here on the NASDAQ started going crazy. And that was a sign to be concerned. Now, the traditional Hindenburg Omen is on the NYSE, but for reasons I don't know, TradeStation no longer gives you the NYSE, which was $NYA, I believe. These red bars are bangos, and the bangos were something that was sort of the market exuberance of to make you concerned. And why I wanted to show you that is because when I look at the NASDAQ, for example, and I wish I could look at the NYSE, but it's not here. We had some Hindenburgs here. We talked back in May by this tool. But more importantly, we've had a number of bangos firing. And when I look here at the S&P 1500, I'm seeing bangos. So this is making me concerned because typically the bangos occur near market tops. Now, they don't have to be big drops in the market, but when I see bangos, I get a little bit concerned. So another week of a bullish bias. The major indices all logged decent gains, which had the S&P 500 close above 4,400 for its fifth straight winning week. The NASDAQ, its eighth straight week of gains. What bear market? Things got started upbeat note after Goldman Sachs actually raised its 2023 year-end S&P 500 to 4,500 from 4,000. Now keep in mind, 4,500 from where we sit right now is not that far away, so it doesn't suggest a big move left in the market. Now, one of the folks that I follow, who is at Piper, has been calling for 47.50, and the thing I like most about him is when he was so bullish in 2020, even as the market rolled over, and he because of his work, I believe his name's Craig Johnson, really was a reason why I went so heavy in the market. So it's nice to see some big time brokerage houses like Goldman Sachs turn positive. But Craig Johnson, who again is somebody that I respect a lot, has been calling for a year end of 47.50 even since January. So, um, you know, right now the Dow, let's see, the S&P closed at 4409, so that's just 100 points away for the Goldman call. I don't think they stuck their neck out too far. Again, mega caps for the certainly beginning of the week led, although small and mid caps did play some catch up. The Russell ended up only up 0.5%, but for the month they have the largest gain to date, up 7.2. Like I said, we had triple, quadruple option expiration on Friday with some profit taking. Really, when you think about it, the Dow down 100 points, the Nasdaq down 93, S&P down 16. Um, None of those are 1% moves. So, and the VIX was the only thing down more than 1%, and it was down 6%. That doesn't suggest a frightened market. So, if the markets continue to broaden out participation, that's bullish, but we're getting signs of overbought. I showed you the Bango, and those concern me. I continued to increase exposure during the week, but I took some profits also during the week going into the long weekend. Um, why? Because I'm concerned the market's going to fall, but I'm also realizing that market doesn't care what I think, and I still want to participate. So taking off some of my positions or thinning them made sense. And again, we seem to be following the actions of the Fed, not the words. All right, so let's go out of this and let's take a look inside wealth charts. Now, for those folks who were at the live trading or online that we did last week in Orange County, I will be doing a follow-up webinar on Wednesday, so you'll get an email today or tomorrow so that you can register, and we're going to look at some of my favorite option techniques, a follow-up of what we did live, and how I find them and how I manage them. If we look at the spiders to start with, and I think it's indicative of what we saw in the market on Friday, and that was the markets really rallied a lot on Thursday. I mean, you could see what Thursday looked like. I think this is the beginning. Thursday opened up and traded up the entire session. And then on Friday, we opened up, went sideways, and then somewhere around 1 o'clock or so, the market started to sell off. And again, a lot of it may have been position sizing and raising some cash before the long weekend. Each of the indices look the same or very similar. When you look at the daily bar in the S&P, we're near recent highs, closed near the lows. Is that a cloud cover reversal bar? Is it an inside day? I don't think it's an inside day. I think it's a little bit concerning, and the volume was strong, but consider the option expiration. I'm going to wait and see what it looks like on Tuesday. You can see the MACD is still positive. Over here, the Qs, similar type of a candle closing near the low of the day after a major run. Both of these are near extended. I think they came down a little bit. They were certainly the spider got a little bit higher on the extension, as did the Qs. The diamonds are up near, getting closer to the top of this Darvis box type setup. It has a similar candle closing near the end. All of them down a bit on Friday. And then the Russell is really struggling to get above the anchored VWAP from the 2022 highs. Now, if you believe the market's done going up and it's going to crater, you'd expect to see the VIX start to go up. And you can see the VIX close down 6.62% on Friday. And on the week, the VIX was down 2%. So Friday took the VIX down. Again, doesn't really fit with a market that's going to fall apart on Monday. But as my good friend, may rest in peace, George Lee used to say, when the VIX is low, look out below. And when the VIX is high, it's time to buy. Because at some point, with the low VIX, you're going to expect the market is going to break down. That's going to cause the VIX to go up. And it's when that VIX starts rising is when I'm nervous. And when it starts falling after a big rise is when I want to get in. So right now, the VIX is just not doing much. And the dollar is pulled back to the 50. If I look at commodities, you could see despite the fact, let me just look at the dollar again. The dollar, it was up 0.18 on Friday, but on the week, the dollar came down considerably. Was down 1.16%. When I look at the commodities, gold was relatively flat on Friday after a strong day on Thursday. Silver stronger than gold, getting up close to its 50. Oil bounced as well. A lot of commodities picking up here. And then look at this, natural gas on Thursday was up 8.84%, then another 2.42 on Friday. Is it finally breaking out? Is it time to load up? Do we have a run to 13? We could. I don't expect that, but we could. But I've been long natural gas playing Boyle for a couple weeks now, and frankly, it's the first time it's actually moving. The 10-year, as we showed you before, was higher on the week. Let's just look at on the weekly of the 10-year here. Oh, I did that again. I have to remember to highlight the box there, and let's look at the weekly. And you could see the 10-year on the week was up 0.64%. On the daily, you bounced off of the Thursday lows, was up 1%. If we go and we look at the timing model, no surprise, we remain in a buy signal on all four. So despite the one-day turnaround on Friday, which could have been 3-day weekend and options expiration driven, we're above the 30-week WMA. We have green weekly bongos, so I remain in a 4 green arrow, still long this market. On the breadth side, we'd love to see it broaden out. We don't really want to see TLT spike because that'll sound like recession time. It hasn't spiked. The RSP, which is an equal weight spiders, has turned up a little bit versus the cap weight, but it's been underwater or trailing the cap weight for some time. We could see that the equal weight Qs have not turned up at all. Um, Copper is outperforming gold. Does that say good things about copper? It might. The Chinese actually came out last week and talked about their supplies were tight on copper, and wouldn't be surprised to see some rally in Southern Copper, FCX, and some of the copper stocks. Semiconductors, the broad XSD has been outperforming for a little while. The large cap SMH, the 50 trailing horribly the FANGs, nothing really changed there, and the Qs outperforming the Russell. When we look at the hourly sectors to get a sense of what is and what's not working now, materials up a little bit, communications still in the upper part, but weakened over the last couple of weeks. Energy has not really got going yet. Financials are up off their bottom but haven't done much. Industrials have had a big move, a very big move. We've been talking about it for the last week. Technology remains strong. If we thought the market was going to roll over, we'd expect strength in staples, not really seeing it. Real estate, not really seeing it. Utilities, not really seeing it. We are seeing it in discretionary. LABU gave up some at the end of the week, but is compared very favorably to XLV right now, both compared to the spider. And the FANGs continue to outplay the spider, which we already know. When I go into my bull scanner page, and let me set this up, but first let's look at the heat map, and we could see that you take out Nvidia and Tesla, and we got a lot of red there. Markets were down, should not be a big surprise. And a lot of the ones that have been doing well, the Adobe on earnings, you can see Adobe had a big reversal bar. The night before, it looked like Adobe was going to go crazy up, but it traded down from the open. You never want to see that after earnings. Meta, what a great run this has had. Doubt it's topping. Google, a little bit of a pullback here. Netflix has been another leader. A nice little bit of a reversal candle there, and probably a low close doji on the daily. It's hard for you to believe that these are done going up. I'm just thinking it was one bad day, and I'm going to wait and see what Tuesday brings. If we look at Wealth Scanner, get a sense of what's working in the market right now. Remember I mentioned industrials? Well, let's see what we're going to see. I bet you we're going to see industrials up at the top. So industrials are moving. And you could see, look at this, 1, 2, 3, 4, 5, 6, 7. This is about 10 to 12 market days. Industrials have broken out. Would you expect industrials to be breaking out and leading if we're going into a recession? I don't think so. And I think that's something that's maybe telling us something. Transports have moved up. Interestingly, Spider Value, ARC Israel, social media, real estate still strong. Notice these are all above 800. Spider Growth, SLY, Spider Momentum, TQQQ. And then we drop below 800, but we still have software, ARC Generation, Internet, Dow Jones REITs, and then aerospace, probably driven because SpaceX, I believe, had a big move. So this is definitely a change. There's still technology here. Biotech has dropped down. If we go into the CAT scanner, and let me just spend a few minutes on the scanner today, because this is really I mean, this is what makes my style of trading hum. I can do this manually. And but when we put the scanner into wealth charts, it really changed how I do things. And why? Because as I look back at thousands of charts that were big winners over the last, gosh, I've been doing this for 30 years, 20, 25 years, and I look at what they look like at launch. They came out of bases. At launch, they had volume, breakouts, momentum, gaps, relative strength, volume. So rather than look at 1,000 charts, which by the way I did already Friday night because it gives me a sense of what the market's doing, I like the fact that I have a tool now in wealth charts that allows me to just find the stocks that are moving and then let me design scans based upon that data to help me find particular stocks. So I'm going to look at all symbols, and what we're going to start with is pullbacks and uptrends. So this requires the weekly bongo to be green, which says at least for the last couple of weeks I've turned up. And I want that pullback, so I want that daily bongo within the last 2 weeks have cycled red and back to green, meaning it pulled back and now it's moving up again on the short term. And then I want to find stocks that have my dots. So not necessarily going to like these, but let's look at the top 10. ACCO brands, ACO brands. Don't really know much about this. Stock's been in a downtrend. Um, I'd like to see it take out the 200-day moving average. It failed there, and I don't think I touched this stock until it did. But it did have massive volume. It had volume, breakout, and momentum. Volume turned up. You can see OBV. Notice the pullback in the daily bongo here, or that's a PSER rather, the daily bongo over here. The weekly bongo is green. So the right setup, but I don't like buying things below the 200. I've heard many very smart people say that nothing good happens underneath the 200. A breakout above the 200 and the relative strength turning up would be interesting. ENVX, have no idea what this company does. Does it really matter? I'm looking at charts. I might want to know what this company does because even though this is a red candle, let's think about what happened with this stock. Matter of fact, we can look because what happened is the stock gapped up at the open, gave most of it back, and then closed right where it opened. So let's look at a 15-minute chart here. So here was a big gap up. I suspect there was some kind of a news event. Reiterates a buy, price target of 20. All right, well, that got somebody paying attention. Then it sold off, and then it ran up into the close. So when I look at that on the daily chart, what I see is I don't really care that it's red because it was still up 10%. Clean breakout out of a wedge with gap, volume, breakout momentum. Look at relative strength at OBV. I'll probably do a little research on Enovix Corp and see what they do. My guess is they're probably an industrial. Okay, the next one, ABCM, Abcam. Another news-driven play. Now this one, I'd like to know what's going on because what a pattern. It was pretty much basing here, pull back to the 200. Look how close the moving averages are. Clearly was in a squeeze for quite a long period of time. And then on Friday, it broke out on volume, gap, volume, and momentum. And it didn't get a breakout because I guess it determined that it broke out of the pattern a few days earlier. Look at the relative strength in OBV. So I'd be putting Abcam on my watch list. Got to figure out what it does before I get too excited. And these are ADRs. All right, Ball. I think this is a packaging company. And I did a little research to see what happened here. This is one that I'm also interested in. Notice the beauty of this scan. This scan is finding actionable stocks. Doesn't tell me what they do. I got to do research. But it's finding stocks that met the criteria that I want. So again, Uptrend on the weekly, here's the bongo. A pullback on the daily, here's the bongo, with my momentum dots having at least one momentum dot. So this one has volume, a breakout, and momentum with great relative strength at OBV. The reason why this is up is it's on rumor of a sale of one of their a multi-billion, I think it was like a $5 billion sale of one of their divisions. And obviously Wall Street likes that. Let's see what this says here. Neutral lowers it to 57. We'll see if there's not some upgrades coming out. But again, I like that pattern. Bungie. Mosaic and CF are two of the other fertilizer stocks. They looked interesting, but they didn't make my buy watch list. And Bungie had an acquisition or merger or something, some kind of news of late. Let's see if I can find anything out there. Lowers to 121. Well, it's in the 90s right now. Outperform 120. Dividend. So it's not doing much here. And frankly, I passed on it when I looked at the regular charts in HDSI. But look at the volume, the breakout, the momentum, the two bongos. Interesting. I'm not sure it's actionable for me. CVT, CVent holding, looks like a takeover. Dr. Gold, I'm assuming this is a gold stock, and this looks interesting to me, and this is on my watch list. I want uptrend on the longer time frame. Did have a little pullback here, but clearly an uptrend. I want a pullback on the shorter time, and I want it breaking out. And here we go, big volume, breakout, momentum, relative strength and OBV turning up. DRD rather, looks interesting. The next one, Knowles Corporation. The first thing I say is it's too loosey-goosey all over the place, so I'd probably pass on it. The next one is Liquidia Corp. Again, don't know what this company does. Meets my criteria. It's a cheap stock. It's had some really big moves here. I think I'm going to pass on that one. There'll be some other ones out that we look at. And then I'm going to stop at this one right here, MSTR, and then I'll look at some of the other scans. This is one that I've been in and out of. It flies with Bitcoin. If Bitcoin is doing well, then this thing is doing well. And it's really getting close to breaking out on this trend line. And a breakout above this trend line will get me interested. I mentioned Binance. I think I mentioned it, that Binance worked out some of its issues with the Fed. And if that's the case, then we could see a move in Bitcoin. And I think MSTR, Riot, HUT, and Mara are all stocks that will benefit. You had a breakout with volume and momentum, relative strength starting to stir. Not yet, but a clear-cut breakout above that will get me interested. So that's my favorite type of stocks to buy, and that was going through a number of them that look good. The next thing I like to look at are things that have been beaten down that are starting to pop. So I call those my bottom poppers. Now, to make my bottom poppers, all I did is I put my that's the wrong one. Hold on. There it is. 5 and 500,000 shares. Required a bullish dot. Bongo Daily had to flip recently within 3 bars. And I don't care what the Bongo Weekly is still bearish. I could have put it as anything. And the Bongo Daily is bullish. So these are things that are beaten up that have some my dots forming, and maybe they're early in their reversal. Bristol Myers Squibb is one that I am interested in. It pays a nice dividend. It's a leading cancer immunotherapy company. Now, it's a little far down for my taste. It's below that 200. But sometimes if I can buy a quality stock bouncing off the bottom, so this is going to sit on my watch list. Look at the volume, a breakout, momentum, relative strength getting there, not there yet. CB Chubb. I will tell you for whatever reason, there were a lot of insurance companies on my buy list. Don't know what's going on there, but the insurance companies look good. This guy's got to get above the 50. It's below the 200, probably would pass. Emergent Biosystems, this is a biotech company. Um, Not really looking that exciting to me. HDFC, I believe this is an international bank, and this one did look interesting, especially with the banks improving internationally and in the U.S. with volume, breakout, momentum. Look at relative strength, OBV here, relative strength trying to break out. You know, it's above the 200. That's good. I worry about getting above the 50, but that's one that I'll be watching. NE is a utility stock. So breaking out above the 50 here and failing, it needs to do a little bit more work. X-ray is another one. And you can see X-ray is about to break above the 50. These are not as attractive, but I'm looking for something that is starting to move, like Bristol Myers. That's a quality merchandise that's just been recently beaten down. Now, rockets. Sometimes I want to buy leaders that have already run. You got to be careful with these, and you got to be relying on the strength of a market. But my rocket scan requires price and volume, and it requires weekly flipped more than 5 weeks ago, so you had to have a nice run already, and bullish bongo, bullish weekly. So what you should see are extended stocks. ATCO is up a lot. Bullish weekly, flipped a long time ago. We already talked about that one. We talked about ENVX up. We looked at ABCM. So you're getting similar stocks because you had some pullbacks here. And there's Ball, and there's CVT. Anything here that looked interesting to me? This one pays a big dividend, ORCC. I mean, I think it's a really big dividend if I remember correctly. I'm not seeing some clear-cut rockets here. Maybe Spotify might count. Here's a stock that's in a beautiful uptrend. I heard something that Harry and Meghan's podcast is being pulled, and that's why Spot is rallying. What am I to argue with that? It's rallying. So you've got volume, breakout momentum. You got relative strength and OBV looking good. So that's another group of stocks. Here's another insurance company, AIZ. Now, this one is just broken above the 200, kind of interesting to me, on volume and a breakout, relative strength and OBV getting there. I didn't put a lot of the insurance on things I'd buy right away, but there are a number of them like this one that if it breaks above this area, I might get interested. The fourth one I have is Momo, and all Momo requires is a lot of dots. It doesn't require anything else. So you're going to see some of the similar stocks. This is a takeout already. NVIX, iRobot. Let's look at that one. Yeah, to me, it's gapped up way too far to find a reasonable stop. I might want to go look why. Probably too late. AbbVie. Interesting. This is a great company. Their product Humira is now going biosimilar. It was I think a 20 billion worldwide product, but they've done a lot to replace it. I would have to think that price is hooked in. It's got 3 green dots. It's pretty low on its pattern. It kind of reminds me of Bristol Myers Squibb, but I'll pass. Arcam, we already looked at. ADT Security. Again, all I'm requiring are the dots. Relative strength and OBV look good. Volume looks good. A lot of home building is going to need security. This is one I'm going to add to my watch list. All right. In fact, all I got to do is start hitting it. Ball we looked at. Here's Bungie again. Here's Bristol Myers Squibb again. Chubb again. Cvent Holdings again. Dr. Gold again. EBS. All right. So those are 4 scans that I've built. These scans, the first one was to look for stocks that have pulled back in an uptrend and are going with momentum. My go-to A trade. The second one was stocks that are beaten up, kind of like my tandem trade, where they've gone sideways and now they're starting to move. The third one was looking at rockets, things that are big leaders. Sometimes you'll get a little pullback and can buy them. And the fourth one is momentum up, where I've dropped all the other parameters except I'm looking for some of my dots. Now, we can also look for things the other way. So retracements and downtrends. And I'm thinking that maybe I should be opening my eyes and looking to the dark side and getting a list put together. So let's see what we find on retracements to the downside. Now, retracement to the downside should look just like my pullbacks and uptrend, but reversed. So here's a stock that's gradually falling. How do I know it's gradually falling? Well, I can see the weekly, but I can also see it's below the 200. It pulled into its moving averages and failed. That's what gets me excited. Volume. So you have volume, breakdown, momentum, out of a squeeze with weakening relative strength and OBV. That's the kind of stock I like to short. So look at that one. ARE, Alexander Real Estate. Um, yeah, I mean, similarly, but it's already dropped quite a bit. So the next one. BJ's Restaurants, still above the 50. Cabot Corp, still above the 17, so not really. CVS. CVS has got Aetna, and all the insurance companies got hammered. Yeah, same thing. Failed at the 17, rolling over. So CVS might be one I'd add to my short list. I want to find stocks that have broken down and retraced. And I did find a number of them when I looked at charts. Let's see if any of the other ones come out to me. Not an expensive stock, and maybe it's I like more expensive to short. But Brothers Coffee ran into the 50 and failed. Another attempt failed. It failed at the 17. This thing's coming down, and at least 10-15%. And this is another one that I might consider shorting. So I think I've got to keep my mind open to shorts. MOH is a managed care play. Again, breaking down here. It's probably going to have some support in this area, but if it breaks down below that, how far can it go? This is a stock that obviously it's down quite a bit, but it's been a whole lot lower in the past. That wasn't very profound. That was obvious. Privia is a physician. They own and manage primary care and take risk. And again, if you're in the risk-bearing world and you get others saying that their healthcare costs are going up, then all these stocks sold off at the same time. We'll look at Humana and United, but this one's breaking down. Humana gave the zinger on Friday, and you could see Thursday, Wednesday, it dropped on United's news on Wednesday, and then they had their own news on Friday. United is the one that warned on Wednesday about costs were up, and you could see the big drop it had. And then Elevance is another one. So how am I going to play? I'm not ready to short until I see the indices roll over. One day does not end what has been a either massive bear market rally or a new bull off the October 13th bottom. I'm going to look at a couple of those pullbacks and uptrends. I'm going to be ready to pounce on Tuesday if I get in the market what I want to get. But to be honest, I'm still thinking this market's going lower. But I think I want to see it move lower and not anticipate it, but rather react to the move. But I want to have a list of longs, a list of shorts, and see if there's anything on my buy watch that I wanted to call out that we haven't looked at. There's ARCM. Arch Capital is below the 50, but look at the volume on Friday. It's one I wanted to watch, maybe not yet ready. AIG is another one of these insurance companies. It's broke out from a recent congestion area. We looked at AIZ. Amphastar is I think it's a generic drug manufacturer, but what a big breakout on Thursday and Friday. Notice it's a little bit overbought. Amazon is just tooling up there. Right now it looks a little heavy, but it's lagged some of the other FANG stocks. Abercrombie and Fitch is another one that I like a lot. And it's had a big move, but if you look at its fundamentals, it certainly could go higher. I'd rather buy it on a pullback. And then AppLovin was another one that looked interesting with some nice earnings coming in. But there's a lot of different stocks here. Even coal started to look interesting. Big volume on Thursday and Friday. 3-dot move on Thursday. Relative strength in OBV. COLL, a pharmaceutical name, looked interesting. Breaking above the 50 with massive volume, breakout momentum, and volume. Relative strength turning up in OBV. Boy, there's a lot of stocks here that looked interesting. Immunocore was another biotech breakout that looked interesting here. Kemper, another insurance name. This would be more of the bottom fishing one. I think I'd kind of rather see it get above the 50, but that one I want to watch as well. So I watch the whole market, but this gives me a way of managing a small number of stocks. The fact that it grew so much this weekend is something that gives me a little bit of optimism. One of the ways to play copper is Southern Copper, SCCO. If China is really tight on supply of copper, you might expect copper to go higher. Looked at Spotify. So I think I've looked at enough names. It'd be fun to do these live so I could actually comment on some of your stocks. Um, sometimes I need to know more information than I could see here. So let's take an example of that. And if I go back to my CAT scanner and I go into the pullbacks and uptrend, and I look at something like a ENVX, I don't have a whole lot of fundamentals there. So I will look at other places. And in this case, I'm going to look at TradingView, which has some really good stuff in it. So ignore everything on the chart. Much of it is what you see in wealth charts with a few other goodies. But the cool thing, so I just broke out of resistance here. That's nice to see. That's actually really good to see. But let's look at the fundamentals on this guy. So this is what I really like about TradingView. I'm going to click up the earnings, and it's going to give me a sense of what does it do. Design and development of silicone and anode lithium ion batteries. Okay, so they're involved in the electric vehicle batteries probably. I don't know if that makes me happy or sad. I can look at earnings. They don't make money. I don't like to see companies that are losing. I can look at revenue. They had a big Q2 reported revenue. Fundamentals here don't excite me, so I probably will not play this one. The other one that was interesting, and I do think you got to do research on these companies, not just buy them because of the chart. ABCM, what do they do? So let me go to my TradingView chart. Now, as much as I love TradingView, it does have a very fundamental problem in my mind. And that fundamental problem is it doesn't have a scanner, and the scanners in wealth charts are to die for. Here is Abcam. We can see it has broken out of a wedge. It's moved quite a bit. The high jump is at 100%, so I have to be careful there. But let's see if we can find out a little bit about it. What kind of news did it have on this? Up to buy, takeover interest. Here we go again. All right, so and then let's look here at fundamentals. Abcam, Global Life Science distributes antibodies and protein research tools. I mean, how great is this to get this information? Let's look at earnings. Look at the earning forecast to grow. I like that. Look at the revenue forecast to grow, to go from 150 and end at 329 and 5, so doubling. So 233, 250, 290, 285, 329. Abcam looks interesting. I don't like to chase things just because of potential takeovers, but it's got the dots and it looks interesting. So on that note, I'm going to say goodbye. Have a great week, and those who are at my recent meeting, I look forward to seeing you Wednesday night.